The global economy was sent into a tailspin in 2008 with the collapse of Lehman Brothers and the subsequent financial crisis. Many countries took severe measures to revive their economies, but some are still struggling to recover fully. One of those countries is the United Kingdom. Even though it's been more than a decade since the crisis, the UK has not yet fully recovered from the economic and financial fallout. In this video, we will take a closer look at the economic indicators and the impact on individuals and households, as well as the financial sector, to understand why the UK has not fully recovered and what can be done to change that. When it comes to measuring the health of an economy, there are several key indicators that experts look at. One of the most important indicators is GDP growth, which measures the rate at which the economy is expanding. After the financial crisis, the UK's GDP growth was slow to recover, and even today, it remains below pre-crisis levels. Another indicator is the unemployment rate, which measures the percentage of people who are out of work. The UK's unemployment rate rose sharply after the crisis, and it took several years for it to return to pre-crisis levels. Inflation is another key indicator which measures the rate at which prices for goods and services are rising. The Bank of England's target rate for inflation is 2%. However, since the financial crisis, inflation has consistently remained above that target, hitting a high of 3.1% in 2017. This has put pressure on household budgets as wages have not kept up with the rising cost of living. Furthermore, the ongoing Brexit process has added to the uncertainty and has hindered the UK's economic recovery. The UK's economy has been affected by the uncertainty of the Brexit deal, which has led to a slowdown in business investment and consumer spending. All of these indicators demonstrate that the UK's recovery from the 2008 financial crisis has been slow and uneven. While other developed countries have seen a more robust recovery, the UK is still struggling to fully recover from the economic and financial fallout of the crisis. The 2008 financial crisis had a significant impact on individuals and households in the UK. The recession that followed led to a significant increase in unemployment, which in turn affected the income and living standards of many families. The unemployment rate rose sharply from 5% in 2008 to a peak of 8.5% in 2011. This meant that many people lost their jobs and struggled to find new ones, leading to a decrease in household income and an increase in poverty. Additionally, the cost of living has risen significantly since the crisis, but wages have not kept pace with inflation. This has put pressure on household budgets and has led to a decline in living standards for many families. The gap between the rich and poor has also widened, with income inequality at its highest level in decades. Household debt has also increased since the financial crisis, as more and more people have been forced to rely on credit to make ends meet. The total amount of consumer credit outstanding in the UK reached a record high of £192 billion in 2020, and that has led to concern about the potential for a debt crisis in the future. All of these factors have contributed to a situation where many people in the UK are struggling to make ends meet and are living in poverty, despite the country's overall economic recovery. The 2008 financial crisis had a profound impact on the UK's financial sector. Many banks and financial institutions were affected by the crisis, and some required government bailouts to stay afloat. This led to a loss of confidence in the sector and a decline in the number of financial services firms operating in the UK. The sector has not fully recovered since the crisis, and there are still ongoing issues such as low interest rates and a lack of lending. Low interest rates make it difficult for banks to earn a profit, and this has led to a decline in the number of banks operating in the UK. Furthermore, the lack of lending is a major concern as it can slow down economic growth and make it harder for businesses and individuals to access credit. The ongoing Brexit process has also affected the financial sector, as many firms have relocated or are planning to relocate their operations to other European countries in order to maintain access to the EU market. This has led to a loss of jobs and a decline in the number of financial services firms operating in the UK. In summary, the financial sector has not fully recovered from the 2008 financial crisis and continues to face ongoing issues such as low interest rates, lack of lending, and the ongoing Brexit process, which has further affected the sector. This has had a negative impact on the overall economy and has hindered the UK's recovery from the crisis. In this video, we examined the economic indicators and the impact on individuals and households, as well as the financial sector, to understand why the UK has not fully recovered from the 2008 financial crisis. We have seen that despite more than a decade passing since the crisis, the UK's economy has not yet fully recovered. GDP growth remains below pre-crisis levels, unemployment is still above pre-crisis levels, inflation is consistently above the target, and household debt is at a record high. The ongoing Brexit process has added to the uncertainty and has hindered the UK's economic recovery. The financial sector has also not fully recovered and continues to face ongoing issues such as low interest rates, lack of lending, and the ongoing Brexit process, which has further affected the sector. This has had a negative impact on the overall economy and has hindered the UK's recovery from the crisis. It's important to note that the UK is not alone in its struggles to recover from the financial crisis, but the slow recovery has had a significant impact on individuals and households, leading to increased poverty and inequality in the country. To change this, the government and the private sector need to work together to create policies that promote economic growth, increase wages, and reduce household debt. In conclusion, the UK has not fully recovered from the 2008 financial crisis, and there is a lot of work that needs to be done to change that.